Hello and welcome to SBI Presents India Revival Mission eForum, presented by State Bank of India, co-powered by LIC and Punjab National Bank. Now, this is a very special initiative that we at the Times Network have rolled out, which is looking at how the economy of this country is looking to revive, reboot, and relaunch now. As we all know, the country is recovering from the pandemic-induced lockdown, and green shoots of growth are being witnessed all around. In fact, in its recent policy statement, the Reserve Bank of India has forecast a 10.5% growth for India for FY22. And with the rollout of the COVID-19 vaccine, even the Indian consumers are looking upbeat about the future along with corporate India. A recent CARE Ratings banking review report of January 2021 also shows that bank credit growth has been mainly led by the increase in retail loans. So today's very special panel discussion is focusing on the thought of how growth outlook for consumer confidence and retail loans will be brought about. Because for the economy to fire, it is very important that consumer confidence and consumer consumption comes back on track. And I have a panel of experts here today with me to discuss this very topic. Allow me to first introduce my panelists. We have Ms. Saloni Narayan. She's the Deputy Managing Director, Retail Business at the State Bank of India. We have Mr. Sumit Bali. He's the President and Head of Retail Lending at Axis Bank. Mr. Sanjay Kumar Agarwal, the Senior Director at CARE Ratings. And also Sanjay Doshi, Partner and Head Financial Services Advisory, KPMG in India. Ma'am, gentlemen, thank you so much for joining me. Saloni ma'am, I'll start with you. Now, SBI, of course, the largest bank in the country. During the time of the pandemic and the lockdown, everybody knows that technology and digital came to the rescue. At SBI, how were you able to use digitization to help the bank reach out to the consumers and keep that story going, keep that communication going with all your consumers?
Thank you very much, Sumit. Actually, this pandemic has really driven the digital story very hard, and whatever we have achieved during this period has been a lot contributed by the digital journeys that we created and the digital adoption by the customers. So this last 1 year, April onwards, we have grown by around 70,000 crores in personal loan itself, just keeping the housing loan aside. Just the P segment loans, what we call the express credit, the auto loans, and the education loan. And when we look at the trends, we find that out of the portfolio of, say, around 2.20 crores in express credit, 38% is contributed by digital. So this 1 year has been a lot about digital, and the journeys are available for the customers. And for us also, internally, we have done a lot of process changes, making this a very seamless journey for our own people to actually dispense a personal loan. Actually, the loan that was earlier sanctioned, it would take 40 minutes. Now it takes just 7 minutes. So it is as simple as that. Apart from that, we have our pre-approved personal loans, where you get a loan by just 4 clicks of a button. You only have to download the YONO app and apply for the loan. Then there are other initiatives that have actually also contributed, like the e-stamping, the digital documentation. I think now the state governments are actively working on that. So we are also engaging with the state government, also with NESL, so that all these loans are possible without going to the branch. Of course, branches are there. The omni-channel experience will remain, and customers are still free to go to the branch. But we would want them to do it more on the digital platform, that too in a self-assist mode. So that has been the story thus far. And we are very confident that we'll be able to scale up our digital book of the personal segment to more than 50%. That is what we have targeted in this 1 year.
Fantastic. So I'll take the same question ahead to Mr. Bali. Mr. Bali, at Axis also, are you seeing a similar story where digital banking has come in to connect with the consumer and keep that relationship going? Because let's be honest, that is what forms the base of any, whether it's lending or the borrowing, or the deposits that the consumer gives to you. It's always about that relationship that they have with their bank. So what's been the story at Axis?
So at Axis, we were always betting on digital. I think one thing which happened during this pandemic, I think everything got a fillip, especially anything which had to do with digital. So we've really seen a step up, and as our business has grown quarter on quarter, we're doing probably the ever highest business on through digital means. As Ms. Narayan said, for us, almost 50 to 70% of our personal loans or credit card all originate digitally, and it's just a matter of few clicks before the money is in your account or card is sanctioned. Even something like OD, almost virtually 94-95% of our ODs are done digitally, which is a matter of few clicks. So a lot of push happened, a lot of investments we had made gave good results during this pandemic. And I think going forward, it is going to sustain, and that's a positive thing because it gives customer a choice to be able to do a transaction 24/7, 365 days a year in a very seamless, efficient manner. And it's a win-win for both bank as well as the customer. And we are expanding all this journey to all the other products, whether it is mortgages, whether it is auto loans, even unsecured business installment loan, working capital, everything is going to get digitized in the next 1 year.
Fantastic. That's really important because that's what's required just to make it easier for consumers to get their hands on these products. I'll come to Mr. Agarwal. So one important part, and what Mr. Bali was also talking about, that they're digitizing so that the loan process becomes easier and quicker, and Ms. Narayan also spoke about that. One important part that kind of got impacted is an individual's credit ratings. Because of the lockdown, obviously the government did talk about the moratorium for the loans. But I'm coming to a very basic question, because there are very often people who just say, what is this importance of this credit rating? Why does it matter if I pay my credit card bill a little later, or if I miss one EMI of my loan and pay it a little while later? Just wanting to get your inputs on the focus of why a credit rating is important for a consumer.
So if you see the various schemes that various banks and lenders have now been introducing, there is a lot of focus on the individual credit bureau scores, because that becomes sort of a cutoff. One is for deciding whether to take in the credit or not, and two is for giving the sort of interest rates and other benefit that the consumer would want from the lender. So in that sense, these credit bureau scores have become very important, and maintaining those scores becomes important to the borrower, so that he can borrow more, borrow at much easier terms, and borrow from a much larger variety of lenders. So it's all about whether you want a choice or whether you want to surrender the choice for some reason which are within your control. And if you see this pandemic, credit bureau scores have been very important for maintaining the asset quality and the lender-borrower relationships. Right. Because people are very aware of credit bureau scores now. So this credit rating is important to the individual, and that has helped us tide over the pandemic, unless when we saw the global financial crisis way back in 2008, where in some cases unsecured personal loan of some of the institutions went down by almost 80 to 90%. Now we see the percentage is much more reasonable, and wherever the payments are not being made, there are genuine concerns. And now both the lender and the borrower, along with the support of RBI and others, can sit down and try to mitigate the situation rather than be forced to take a strong decision one way or the other.
Absolutely. That's most important in that point. And I'll come to Mr. Doshi now, just to taking this ahead, because that is one. And before I come to the banks, I'll first come to Mr. Doshi on this point, which is that, there is this concern of this loans dropping through. People might not repay the loans. What will be the impact? Well, yes, these are predominantly, we're talking about the retail sector. So maybe the ticket sizes are smaller than what corporate India would be. But in the end, it's like a snowball effect. It will add up and will hit the banks, hit the economy on the whole. Just how have you seen things pan out during this last 1 year? And maybe what are some views for the way ahead?
So if you actually see the financial services, and I will actually take both NBFCs and banks into play, and even pre-COVID, the sector was, of course, going through challenges, especially NBFCs. But one good thing about this entire whatever upheaval the sector was going through, Retail was not really getting, impacted in terms of NPAs or the kind of stress you would see. I think unless it's, of course, any kind of misgovernance kind of issues. But if you take the governance issues out, pure play in terms of borrowers' behavior has always been really played out well in the retail sector. Of course, last 1 year was something which was unexpected for every one of us. And with the government and the regulator really giving schemes around moratorium and one-time restructuring, things have been better, have been much under control. And the entire stress is now going to play out. It's played out a lot in the last couple of months, and maybe give a couple of months more, because the moratorium period would have got ended sometime in November. And post that, all the moratorium borrowers who had availed moratorium would have started repaying their loans. And by the time they also get back to their normal course of business, they would actually take some time to start repaying. So it will play out in this 2 months and probably a quarter more at max. That's what how we see it, and that's where probably the peak of NPA should play out. I think one of the elements which Sanjay mentioned about the entire credit scorecard and credit bureaus, that's really played out very positively. It's been very critical, and it's very critical even from a digital journey perspective, because a lot of digital journeys are really enabled by the credit scorecards, and credit bureau reports are very critical in it. So credit bureau really playing out quite well has also helped in this entire recovery.
Absolutely, it's just given this extra boost, extra push. Before we continue with the panel, I just want to a big shout out to the audience. Thank you for tuning in. This is not just a one-way street. So if you have any questions for our panelists, there is a chat, a Q&A window there on the website. So we are open. We are taking audience questions. So please feel free to put in your question. If you have any particular panelist towards whom you want to direct that question, please do that. Do mention your name, and I will put that question forward to our panelists here. Coming back to the panel, Ms. Narayan, I just wanted to take what my question to Mr. Doshi was, a step ahead with you. And here I want to focus on you with the home loan aspect, because these loan rates are at 15-year lows. So people are showing a lot of interest in moving and taking up home loans. SBI's also a home loan book touched about 5 trillion rupees last month, which is up from the 4.84 trillion as on 31st December. So clearly consumers are shedding off the pandemic and purchasing new homes. How are you seeing this trend develop to move ahead into the next financial year?
So yes, we did hit the 5 trillion mark last month. And during this 1 year, in fact, in the last 11 months, we have done a sanction of 1 lakh crore, which itself is, I think, a huge number and very commendable, I must say, in view of the fact that the first 3 months, due to the lockdown, we were completely negative. There was no home loan happening. But the consumer sentiment has actually improved a lot. And there are many contributing factors. Of course, one is the rate of interest. I think RBI has kept the repo rate at a very low level, and banks have been able to pass it on to the consumer and keep the home loan rates at a rock bottom. I will say 6.70 is our rate. And this is perhaps a 12-year low. And this is one factor. The other factor is that the builders, they are also extending a lot of freebies to the buyers who care to take the decision to buy a loan. So they want to offload their inventory. Number 3 is the push from the government. The state government like Maharashtra, they brought down the stamp duty from 5% to 2%, then again to 3%. And there was something for the women borrowers last 3-4 days back, it was announced.
Yes.
So all these steps actually are going a long way in improving the sentiment for the buyer, and they are now in a position to actually take a decision instead of postponing their decision to buy a loan. So it's more a question of affordability, if I may say so, because home loan prices really, home prices have really not gone up. The interest rates have gone down. And salaries and all by last 2-3 years, they have not come down. So all these actually have led to more affordability. And another one big major thing is the housing for all by 2022. That also has given a big fillip to the affordable segment, where the subsidy comes 15 days after disbursement. And we are seeing a lot of traction in the tier 2, tier 3 cities for such kind of loans. And the average ticket size for State Bank has increased to 32 lakhs in the last 1 year. It was 28 lakhs last year. Now it is 32 lakhs. So we can see a lot of positive sentiment around home loan. And I'm confident that this story is here to stay.
Absolutely. And what I also feel has happened is that people during this lockdown have kind of realized the importance of the home, where earlier I would be spending hours in traffic and most of my time in.
Correct. Yes. That is true. So, and another one more feature is the work from home.
Yes.
Because of which people are moving to tier 2, tier 3 cities. They are buying bigger houses. All these are factors which are actually contributing to this positive sentiment in the market.
I'll come to Mr. Bali. Mr. Bali, did you have a comment on that? Do you wanted to come in?
Yeah, I think Ms. Narayan has covered it very well. I would just like to add another point. See, overall, if you see for the banks in a low interest rate environment like this, and when capex cycle and the corporate loan book is not growing, this is the only way of growing the overall balance sheet of the book. And I think if you look around, that's why there is this huge amount of focus on home loans. We've never seen these kind of rates. As Ms. Narayan said, it's about a 15-year low. And the affordability index is therefore very high. And everyone is seeing capex cycle not happening. In fact, a lot of corporates are prepaying, taking advantage of the low interest rate regime. So this is the only way banks can grow their book. And hence that also brings in an added focus on growing mortgages.
But, Mr. Bali, just wanted to continue that conversation with you. On the other end, for example, I've got some figures here from India Ratings and Research, which believes that stressed assets in the individual loan segment could increase almost 1.7 times in the second half of FY21. So, which is obviously concerning. So how should banks be tackling this? How are banks keeping this number very much in their viewfinder to focus on?
So, this is a very entity-specific approach to how we treat NPAs. Therefore, a lot of banks would have taken this call that we take it upfront. If a customer is eligible for restructuring and will be supported by restructuring and come out of it stronger, then you extend it. But some of the institutions have also used restructuring to kick the can down the road. So therefore, one good indicator to assess the stress, so as to say, which you are alluding to, would be to see each of the entities has how much of restructured book, what is their restructured book, as I said, and how much of the COVID provision have they used and how much is still left. I think that'll give you a good idea of the incoming stress. By and large, I think besides that, the other point we need to keep in mind is there is about 2.5 lakh crore of ECLGS money, which has provided liquidity to the stressed sectors.
Yes.
Obviously, some of them would come out of it, but some may not, because given the environment has been very tough. That also will play out next year. But by and large, I would say that as earlier panelists have said, this is 2008-9, here the problem limited. Some of the higher delinquency you see is also on the higher ROI products, say like personal loan on cards, where by and large you can absorb a certain amount of increase in NPAs. So I wouldn't worry too much, but it will certainly help to assess the entities on these 2-3 factors to get an idea of the stress coming on to those entities in the next year.
Absolutely, right. Mr. Agarwal, I think you wanted to make a comment on that. And ma'am, I'll come to you as well.
Yes, so as Mr. Bali said, there are multiple issues out here. First is the stress is higher on the unsecured and personal loan portfolio rather than the low yield home loan and CV loan sort of a portfolio. So that portfolio is able to absorb some of the stress. The other thing is banks and institutions have been providing since March 2020 on COVID provisions. So that will absorb some part of the stress. The third thing, as Mr. Bali said, this is very institution specific, and the asset segment the institution is and the yield curve of that asset segment the institution is, which will make a difference. So these are the very large points which will help absorb the issues out there.
Fantastic. Very valid point there, Mr. Agarwal. Ma'am, you wanted to make a point.
Yeah, just wanted to say that during the last quarter, we had a slippage number of around 7,500 crores put together in home loan, SME, and agriculture. I think that was lower than the last year. I mean, we have been able to tackle the slippages in a very efficient manner, and the collection efficiency has gone up to around 99%. And as far as home loans is concerned, frankly speaking, there is very, very low delinquency. And we are reaching out to customers wherever there are vulnerable segments where we need to give some guidance or some extra funding that we are taking care of. As far as personal loan is concerned, our book is very good, considering that 80% of our borrowers is they are all salaried class, so they have not faced any COVID issues. So we are quite upbeat and okay with that. The only challenge, as Sanjay said, was about the MSMEs, because those GECLs have been given. But we are hoping that that liquidity that was provided to the MSMEs will actually help them come out of it. Nevertheless, we are continuously engaging with them so that the story remains intact, because this next 2 quarters is very critical for all the bank side.
So actually, ma'am, I've got one audience question that's coming on SMEs only. I want you to first take that, and then I'll come to Mr. Doshi to get the viewpoint from his angle. Mr. Manoj Patel, who's watching the show from FXM Track Financials, he's the founder of the company. He's asked, what could be the scenario for the next 6 months on SME, MSME loans, on credit monitoring and workflow, including disbursement? So, ma'am, if you want to take that first, and then I'll come to Mr. Doshi.
So again, if you look at MSME in State Bank, this year has been very good because we had the GECL supporting us. But apart from that also, we got quite a few good proposals, and in fact, around 80,000 crores worth of proposals we were able to source and sanction during this year. And the growth till date has been around 29,000 crores, which I think is fairly good. But going forward, for this story to remain, good for us, we are doing a lot of changes in our system. We are looking at our internal processes. We are completely revamping our credit delivery model, because one of the pain points that we found in SME is the delay that takes in getting the loan sanctioned. So all of that we are mindful of, and we are taking a lot of proactive steps to make sure that this year we really do it well for the MSMEs, and whatever handholding is required for the next 6 months, we will be there for our customers.
Fantastic. So I'll come to Mr. Doshi now. So Mr. Doshi, if you could chime in with your thoughts.
So just to add what Saloni ma'am said, I think a lot of focus now, especially with the entire Atmanirbhar initiative of the government, it will be on MSMEs and SMEs. In fact, the next wave of growth on the lending book, we see SME, MSME playing a significant role, both for banks and NBFCs. But it's very critical when you see this entire SME, MSME segment. It's a huge segment, and it's important to really segment the entire portfolio. So when you're talking about the next 6 months, most of these SMEs, MSMEs will be dependent on certain sectors. So things around, for example, SMEs which are dependent on sectors which are something related to education, they have really gone through tough times. The schools, colleges have not really opened up completely in all parts of India. Especially, for example, if you think even geography. So in Mumbai, it's not opened up, right? So SMEs, MSMEs, which businesses are really dependent, stationaries, shops, etc., school uniforms. So those sectors and MSMEs, SMEs will significantly get impacted even in the next 6 months. But then there are many other, SMEs, MSMEs, which are linked to pharmaceuticals, the hospitals, even tourism. So those have really picked up, those businesses have picked up, and hence you can actually see a significant positive impact coming up both on the lending side as well as in their credit performance, the repayment performance.
Superb. Well, thank you for that. And I hope we've been able to answer Manoj's question there. We've got another question from Suyash Kumar. He's with Pro HLP Solutions Private Limited. He's a director there. Mr. Bali, if you could come in for this one. It says, he says, for consumers with ongoing home loan and loss of pay or furloughs due to pandemic has resulted in distress. Now, even if they are serving the EMIs diligently, any other loan like a top up or a loan against property is extremely difficult to sanction by banks. So he just got this query. Just wondering your thoughts on that.
Yeah. So first of all, I would advise look at your current home loan rate. I think one good thing which the regulator has done is that it is easy for you to get the rate reduced or move it to an institution which is going to reduce rates. So a lot of people I know who have home loans which are far higher than current 6.75, 6.8, which is being offered. So please look at that. And I think as bankers, our interest is to have a customer come out of this crisis well and healthy. So to that extent, I think if you've been paying your EMIs, if you've been serving interest and you require a top-up loan, certainly for us, I speak for our institution, we are very happy to support such customers. So I don't think there should be an issue. And as I said, otherwise, today home loans seamlessly you can transfer to any other institution without any foreclosure. So a customer really has huge amount of choices to navigate through this crisis.
Absolutely. And that's what, I mean, I think it's important for the customers at this moment to kind of being a little confused, maybe just to get the guidance. And that's the aim of this panel here, to kind of help them and guide them as to how to tide over things and, you know, keep the momentum going. This is one thing that I wanted to ask to the full panel, and whoever would like to chime in on this. What checks do you think need to be put in place to ensure that consumers don't overborrow or that they're only borrowing through official channels? I mean, it's just to ensure that maybe at a time, like we said earlier, home loan rates are low, but the person should not be overextending themselves just for the sake, okay, the interest rate is low, so let me overextend. That is, you know, I mean, it's a recipe for disaster. So if anybody from the panel would like to take that.
For the banks, I think EMI NMI ratio is one such check. The LTV breach is another thing that we monitor. So it is not so easy for a customer to take more than he actually deserves. And of course, we have the CIBIL score with us. So all the details are there. So I think it's not so easy to bluff the banks or such organizations.
Good. That's because that's very much required to keep that. It shouldn't go overboard. I think Mr. Doshi or Mr. Bali were wanting to chime in.
Yeah, I think Ms. Narayan covered it well. So banks do have mechanism to check, etc. But I would also, I mean, in my 25-year-old of banking experience, I know one thing for sure, that all bad lending happens in good times when interest rates are really low. So it is something which a customer should be very aware. And I think by and large, as earlier was mentioned, that compared to the last financial crisis to now, the awareness of a customer about having a good bureau score is pretty high. So I think that has gone up. Availability of data for an institution to decide about a potential loan applicant is higher. So the chances of this are minimal, but still customer awareness, which has happened through the bureau, is the first risk mitigant in such times.
Yeah, in fact, just to add to what Mr. Bali said, see, there are two things, even from the borrower's perspective. What are you borrowing this money for? And the banks and the lenders have been very, careful there in today's times. What is the use of this money? In fact, the usage has become very critical, whether it's for business purpose, whether it's buying a home, or is it buying any particular asset like a vehicle, whether it's a commercial vehicle or a four-wheeler loan. Because four-wheeler today, given public transport use has reduced, I think that also has become important. So it's also in addition to the restrictions or the kind of checks which banks are going to put, as what ma'am said. It's very important for the borrower also to decide what are you borrowing for in today's times. You really need to come out rather than you start getting into a very consumption-based kind of borrowing.
So true. It's just, you've got to, as they say in the personal finance space, right? You've got to see that you're borrowing for your needs and not just for your wants, not just everything that you want, but what you really need. I want to share some more stats with the panel. So, personal loans account for about 26 lakh crore, according to the latest data from RBI. But that's just 10% of the country's GDP. In rich countries like the US, the number is over 80%. So what can be done to grow the personal loan space in India? So, ma'am, if you'd want to first take that question, and then I'll come to all the other panelists for the same question.
Yeah, so I think that number perhaps would be a sum total of personal segment as well as the home loans and the credit card all put together perhaps, and banks and NBFCs. But even otherwise, if I look at my own bank, we have a customer base of 46 crores. And the number of P segment customers, the borrowers that we have is just 1.20 crores. So you can see the kind of opportunities that exist for us only on our existing to bank customers. So I think the way forward is use of analytics in a very, very big way. Lot of data is available now, which earlier was not available. We have all kinds of surrogate information on the customer, which can actually be used to bring out an machine learning model for lending. That is one thing, that is one learning that I can say that banks can maybe look at, and we are also examining. And then the other thing is, of course, how easy it is to get a loan. That is the key. If it is easy for a customer to get the loan, he will be happy to get it. So again, digital piece is very critical, and omni-channel experience. He should be able to do it whenever and wherever he wants to do it. So that kind of seamless experience for the customer is also very critical to actually improving the credit penetration, as you see. And as far as credit card is concerned, I think our penetration at the country level is 3 or 4%. So it's very, very less. So definitely lot more can be done. But I think analytics has a very critical role, digital has a critical role, and customer experience on the journeys that they experience. These are some of the key factors. And India that way is blessed. The demographic changes that are happening, 2/3 of our country is below 35. We have a lot more millennials. We have more new age rich customers, HNIs. Earlier, 40% of the HNIs, they were concentrated in 3 big cities. Going forward, it is be 40% of the HNIs will be coming from the emerging cities, around more than 100 cities, where we have more and more HNI customers. So all these changes, I think they are giving a lot of opportunity for banks to actually look at the how to handle this increase.
So we'll move from one banker to the other. Mr. Bali, your thoughts from where you are at Axis.
Yeah, obviously this market can grow, and I'll just give 2 separate point of views. So if you look at the customer base and you look at their bureau scores, either they are good to lend, in which case there's not a problem. Customer has to ask for money, he'll get money. They don't have a good bureau score, hence no one wants to lend to them. But there is a large population of new to credit customer, which doesn't mean it is bad to credit. And there are enough tools and analytical tools and social scores which are becoming a proxy for lending. So therefore, that market is pretty large. So we are working on a lot of these behavior scores or social scores, or working with telcos to look at certain database scores, or even the payment data, whether how much you're using on UPI, etc. So that I think will certainly expand the market. Overall, as Ms. Narayan said, the population is younger. They are no longer debt averse. So if I look back and see, my parents are very debt averse. I am not so much, but my son is certainly a step ahead. He wants everything right at the beginning of his life. So they would want loans. So I think that will drive openness of institution, will drive all these initiatives on new to credit will certainly help. So this segment is certainly set for growth from now on.
Absolutely. So in fact, that was going to be my next point, which I was going to take ahead to Mr. Agarwal, is this part that, the generation before this generation was loan averse. They would always speak about, whatever you have, jitti chadar hai, uttai pair phailao. So whatever you have, live with that, don't look at loans. But this new generation is open to taking loans, getting things on EMIs. Is this also a shift that you are seeing in the way ahead when you are looking at the entire space?
Yeah, so that certainly the figures that we are seeing, the loan growth and GDP, loan to GDP growth, those figures are inching upwards, though it's a slow process. They are inching upwards. The other thing, Saloni ma'am and Mr. Sumit did not touch upon was the informal lending sector, which is not captured in the data point. So in some categories, let's say the gold loan, etc., those data points are very strong, whereas for mortgages, etc., it's weak. But in some categories, it's very strong. So we expect that as the digitalization and the customer experience becomes much and much more easier, and the various initiatives government has been taking over the years, such as the JAM scheme, etc., this whole system will get more formalized, and it will be easier for the borrower to borrow or the customer to consume, and hence borrow as he or she required. So there would be a few things which will work along with the demographics, which should help us in improving this figure.
Fantastic. Mr. Doshi, besides my original question about, what can be done to grow the loan space, one point I want to get your thoughts on. What Ms. Narayan said was talking about credit card growth is also, I think, about 3 to 4% is what she said. I have one thought that, and this has also been spoken about earlier by different people, where they say that maybe India has leapfrogged the whole credit card mechanism as such, and we've moved to UPI and mobile wallets. So wanting to get your thoughts on two parts. First is on the loan growth as a whole, and just this part of where maybe we're seeing more growth in UPI and more digital payments besides like a credit card. Your thoughts?
Sure. So Sumit, I'll take your first question on the loan growth. See, you gave that interesting statistics around the percentage, and for developed countries, 80% of their book is for individual credit. I think we also need to see where our country is, right? We are still on the growth. It's still developing. A lot of money is supposed to be spent on creating assets, and hence corporate credit is also very important. Purely really is going to drive the growth of the Indian economy. So even I would say even for the next decade, I would still probably see the share of corporate credit is going to be significant, because a lot of investments are yet to happen from a pure development of our country perspective, right? Whether you're creating infrastructure or you're trying to create any kind of incremental assets. The second part is, I think Sanjay covered it, saying that the informal credit is quite important. You see microfinance, or you even see used commercial vehicle. A lot was in informal credit, which has now started moving a lot to formal credit. And then the new generation is going to leverage more as compared to probably our parents or even our generation, where we didn't really go ahead and took so much of loans, right? So that's going to drive. So the growth is there on the retail assets, but I would say percentage share, it's not going to be significantly higher as compared to what the developed economies are. Cards is, it's between payments and the loan book. I think credit cards, you really put it into two parts, right? One part is people who just use it for transaction purpose and ensure that they are making their payments on time, and hence effectively they are not really taking any loans through credit cards. And the second big part is how cards are used to really fill in your short-term needs on the consumption side. And that's where the entire revolver book comes in. You've seen SBIG, the SBI cards business, which was set up by SBIG, and of course now it's SBI. So the entire SBI cards and the success story around is not only how it's replacing payments, but it has been a good tool for people to use to really build their short-term needs. Of course, when you look at the other payment options, which now people have, UPI and all other wallets, effectively, they don't really take care of your needs they are prepaid wallets, right? You have the money, you're putting the money in the wallet and you're paying it. Right. But cards effectively gives you that short-term credit, so cards will still keep on growing. In fact, you see a lot of banks, a lot of new business models are really coming up on the credit card side. So they are going to be coexistence with all your other payments form. And not only coexistent, but they, at least in my view, they will still have a good growth.
Yeah, I think Mr. Bali had a comment, and then Mr. Agarwal.
Yes, so quickly, just to add on to what Mr. Doshi said, see, overall, your card penetration is just about 4% of your total population, which is abysmally low. So obviously, it will go up. It serves both, as Mr. Doshi said, your cash flow needs and also digitization of payment. Separately, as it is, the payment space is getting hugely digitized. So I would presume and feel that there's a way to go in both these segments, and both can grow independently and will grow possibly.
Fantastic. Mr. Agarwal, you were wanting to make...
Yeah, so what Mr. Doshi has said correctly pointed out was there are two uses of the card. One is the payment and other is the credit. So as Mr. Bali had captured the payment part of it, even in credit, you see huge amount of fintechs which have come in. And now the banks themselves have, practically every bank has a fintech within itself, and they have been very successful in launching the buy now, pay later, those short-term loans and unsecured loans portfolios. And those portfolios are now pretty substantially large. So what 10 years ago would have been captured entirely by the credit card market is now distributed amongst various platforms. So probably the credit card growth may not look high, or the figure may not look very high. But the market certainly is evolving, and it's evolving well, because it also offers a lot of opportunity to the lender given the high rates of revolver, etc. So there's a lot of cushion out there. You also have consumer durable loans and all that. We have a lot of cushion out there. So that will evolve in the market.
Okay. Well, we're just about coming to the end of this panel. We're just about running out of time. So I will come to all the panelists one by one for their closing comments, and maybe if they could leave their thoughts on what the way ahead, at least the next financial year, what does it look like? What could consumers out here who are watching the show expect? I'd like to start with Ms. Saloni Narayan. Ma'am, if you could have your closing comments on the panel today.
I think the next 1 year is going to, the retail momentum is going to grow, and the customer sentiment has improved. It's going to continue to grow. I mean, I see no challenge in that. But as we know that the corporate book also is now looking up, because we have proposals in the pipeline. So, I mean, going forward, I will say it is a very bright outlook for the bank, and a lot of opportunities. Only downside perhaps for us is the stress that could happen. So we have to be mindful of that. Mindful of that. For the customers, I think as far as home loan is concerned, they should not delay the decision to buy a loan. They should go and take a home loan. For other personal loans, I think digital is going to is here to stay. And I think next 1 year, because of the forecast, IMF forecast, the RBI forecast, we have a very good outlook as far as the economy is concerned. And we are all set to ride the high wave.
Absolutely, just being set to ride the high wave. I think that's the best way to bring it up. Mr. Bali, could get you in and your comments as we wind up the panel.
Just echoing what Ms. Narayan said. So next year, the GDP growth forecast is about 10%. Historically, we've seen the retail market grow at anywhere between 2 to 2.5x of the GDP growth. So we are looking at a 20-25% kind of a growth rate going forward. While capex has started, but I think the pressure on retail will be high. Therefore, that means competition will be high, and hence that's a good thing for customers, and the interest rates therefore will be kept in a check. One of the unintended and positive consequence of the pandemic is the kind of cost reduction you see going forward, because work from home, less traveling, less conferences, less in-person meeting does certainly see reflect in the balance sheet of all the companies, and some of that is a sustainable thing going forward. Therefore, all that cost efficiency also will make affordability better, so rates will be competitive, environment is good, consumer confidence as we go into financial year end is looking up. So as Ms. Narayan said, I couldn't agree more that best time for consumers out there, and banks are all willing to lend and grow their books. So we are in a good period right now.
Fantastic. It's a good time, and definitely consumers who want it can make the most of this, going to the banks, get the guidance there that they require. Coming to Mr. Doshi, so for your closing comments.
Yeah, so one more segment which will definitely see a huge transformation on the banking and lending side is the SME, MSME. So in addition to your retail consumers, SME, MSME will see in a very positive way the entire transformation. Ma'am spoke about the entire digitization program. Even Mr. Bali said that, the kind of efforts which are going in digitalization of many of the processes. So the entire customer experience for retail, or is it for SMEs or MSMEs, is going to change, and they are going to enjoy banking and the kind of services which banks or NBFCs are going to offer. are going to really transform a lot. So good days for them.
Yeah, absolutely. Because while we've spoken earlier about the consumption story that needs to fire, and that's the consumer angle of it, obviously the SME story also needs to fire and to go ahead for the economy, for the country to keep moving and get out of this slump. Finally, Mr. Agarwal, coming to you as we close the panel, just your closing comments, your thoughts.
Yes, so as ma'am has said, the digitization journey has picked up steam. We have seen significant businesses move entirely algo-based and straight-through processing. So this processing pace has increased. I mean, today we see home loans, probably 20-25% of the entire home loan basket in India is going through at least the approvals go through state loan STPs. So that will increase since the corporate book is not firing as of now, so the competition on the retail would increase substantially because banks and NBFCs have to focus on that segment. That is what also the equity investors want. As a result, the customers would be spoiled for choice. However, the issue would be in terms of the customers taking precaution for their credit scores and the credit standing. So those with a very good credit standing would get very good offers. Those which are weaker ones, because in COVID we have seen that the weaker segments are the ones which fail significantly. So the weaker one will have very much lesser choice and probably a bad sort of a taste. So I think these are the few trends which will remain. The growth obviously will follow the GDP growth, and lockdown, unlock, all those things will happen. But I think the trend today is what is likely to stay for some time as we go ahead.
Fantastic. Well, thank you so much for coming on this panel. Thank you, Ms. Narayan. Thank you, Mr. Bali. Thank you, Mr. Doshi. And thank you, Mr. Agarwal. It's been a fantastic discussion, very insightful. And I hope the audience, you are taking back some key pointers that our panelists have made about the fact that, yes, growth is there. It is a good time to manage to take up loans if you require it. Obviously, plan properly. Use the digital medium to the best because the banks are out there to help us with this digital medium to reduce the paperwork, reduce time, most importantly, and provide ease of access and ease of reaching out. You've been watching SBI Presents Times Network's India Revival Mission eForum, co-powered by LIC and Punjab National Bank. Thank you so much for attending and watching. Thank you.